Let's go, man. We got another episode of the Athletes and Assets podcast. I'm joined by my guy, Marshall Newhouse, NFL veteran, former offensive tackle, and Marshall is really adept in sort of the venture investing space. But Marshall, let's skip the small talk, man. So, look, I asked ChatGPT, okay, I asked them, Marshall Newhouse is a former NFL player, and he's looking to start his own venture capital firm. Can you give me some names, potential names of what the firm is? Oh. I'm going to read you some names.
I like to hear this. Okay.
Yeah. I'm going to read you some names, and I want your raw reaction, but I'll list a couple before we talk about it.
Sure.
Gridiron Capital Ventures, Newhouse Ventures, Touchdown Capital Partners, Athlete VC Solutions, Grid Ventures, Game Changer Capital. These are so basic. Gosh. Pro Athlete Ventures, Elite Capital Partners, Innovate X Ventures. That sounds like some Elon Musk type shit. Playbook Ventures.
I mean, those are also like just derivative,
so
man.
General.
Like,
yeah.
It's so I get it, but and this is the funny point that you start with the GPT prompt, in that, for an LLM, that thing has to learn from you, and it obviously doesn't know a lot about me. It knows what it scraped about my playing history. I'm an athlete and I'm an investor because you told it I was an investor, but It knows nothing else in that way. So one has my last name in it, which happens to be kind of be a play on words, and then the rest have to do with sports adjacent, like the lowest common denominator. So that's funny that we give ChatGPT so much credit, and people are like, "Oh, it's such a power tool for this and that," which it can be.
Yeah.
But it also matters the input. So that's a funny exercise that you started with, but those are all ass.
You had a successful NFL career, and during that time, you clearly, we have this understanding that you wanted to make money in another way outside of football, another asset class.
Sure.
You could have chose starting your own candy shop, or you could have, started a restaurant chain, or you could have really focused just on real estate, or, stocks or hedge funds. But it seems like your interest has sort of leaned towards the venture capital, angel investing tech space. Why do you think that is?
I would say it's just been a journey. I'm fortunate enough to come from, really smart and attentive parents who kind of just drilled into me, even when I was in high school, about the low odds of getting a scholarship, and when you're in college, the low odds of getting drafted and having a career. So I was always thinking about the next move, and early in my career with some disposable income, but you never know, your career could be over, injury could happen. So I was thinking really simply about just early real estate.
Right.
The first starter home in a good market, with a solid down payment and structure, and just start from there. And then I got introduced to people in the town that I bought in, which was Fort Worth, to being an LP in a real estate fund. So providing you more stable returns, someone else is doing most of the work, you're just deploying capital. You would like to think that it beats the market. So that's another way to diversify, but also put your money to work. And then, as the years went on, I started dabbling, at least learning more about what was out there. And one of those things was the franchise model. Do I want to be a franchisee?
Yeah. That's a popular one.
Yeah, and it's it's definitely doable, and there's a lot of pro athletes who've got into it, have been very successful. There's very notable guys who are now billionaires because of it.
Yeah.
It's if you do it right, there's a lucrative way to build a business, but it takes a lot of man hours, and I just realized specifically while I was playing that was just going to be a hard one to do. Maybe you find a good operator that kind of helps you with that, and a mentor kind of helps you set it up the right way, but out of 12 months, 9 months are dedicated to football for me. And that's not even the other 3 that I'm still training. And so there's just I had to be realistic about my bandwidth and
Sure.
what I could really put on my plate. And so that was something I was interested in. It was good to fun to learn about. But I was like, let me just start veering and thinking about short-term things while I'm playing, and then long-term things that I can start to be actionable about for when I stop playing.
For sure.
So the venture kind of angle started when I moved. I played for the Raiders in 2017, chose to live in San Francisco instead of the East Bay. Love the East Bay. But, I was actively being, with the mindset of, if I live in San Francisco, if I can figure out the commute to work, because that's still my day job, but the idea that I could come home and the epicenter of venture capital and startups was here in this city.
That's right.
from happy hours to, just office visits. I mean, places like, Redbird and like all of their offices are literally like within a mile walk if I really wanted it to be. And so I just wanted to be there because I had a good feeling about putting yourself in the vicinity of those things, and then once you start moving and meeting people, that synergy kind of starts to pick up momentum. And so that was the active choice I made, and ended up meeting a mentor and a friend who kind of led me in that right direction, who was an ex-athlete, who was a managing partner of a firm. The place where we met at was Next Legacy with Ryan Neese. And so that kind of got me started. And then, I come from a background, my dad's a computer programmer, my mom's a CPA.
Oh,
so
nice.
Have a good mind for numbers, that's more her thing, but then I was very familiar with computers at an early age. So tech was always very forward in our house. And so I started to see, all the products that I was an early adopter on, that I was very interested in and curious in as a kid and as a teenager, there's an entire marketplace that selects for founders who are building things, and invest in them early, takes a lot of risk, but helps them build things, helps them get to these thresholds, to the companies you see that are now publicly traded. Some are still private, but they're the biggest industry leaders in the world. And so I got to learn about the process and that entire ecosystem. I was like, this is pretty cool.
Yeah.
And not only is it tech, it's, we talked about CBG, there's all the snacks that are on the shelves. There's an entire ecosystem behind how they get there, how they're market tested, how they grow, how they raise money, and all that. And so that just kind of took me by storm. I was just like, man, this is fascinating, and just learning about the business side of it, and that the doors that I could open via the NFL and networking that I was doing and the relationships that I was making provide me with there's no guarantees. This is a very low batting percentage business, but opens the doors and gives you the opportunities to make some really interesting decisions and meet some really interesting people, like literally industry leaders. Literally, you're one or two people removed from the people that are forefront in our mind. You say Elon's and the Bezoses, but there's like a step below where these guys, the people that funded their companies at the seed stage, live in Silicon Valley, and you're one or two steps removed from them. That was pretty cool. And so that kind of got me started.
For sure. I actually want to go back real quick to the franchise, the franchisee idea. Were there any particular chains you had in mind? Like, I love eating at that place. If I could own a bunch of those, I'd be good.
It was less about that, because that did cross my mind, but I went to a cool executive kind of course up at the Ross School of Business up in the University of Michigan, and I met guys there, and the thing that I took away from that was it's very doable, but they recommended that you stick to like the three of pizza, sandwiches, and what was the other one? I forgot what the third one was, but there's we
got a big three of fast food.
Well, it's a big three of like the most like pizza, sandwiches, and burgers, basically.
I mean, I like that.
But it's just the give yourself the best opportunity to have it start a successful franchisee network, because you hope that it starts with one, then it builds and builds and builds. And those give you the best opportunities. That's what Americans want the most. And if you're thinking about franchising as not only the IP of the original company and you're starting your own business, but under their umbrella, there's franchise fees and all this stuff. But there's also a real estate portion. There's also the land lease.
The land for to put the restaurant in there.
And so there's a lot that comes to it. So you're trying to increase your odds, and you increase your odds by staying in these three different silos. Within that industry, and so it's sandwiches, pizzas, burgers, and so
sandwiches, pizzas, burgers.
Yeah, and so there was stuff I grew up on. I was like, that would be cool. That would be so fun. And then once you kind of sober up, you're like, man, that's probably not the best business for me. As much as I love it, maybe someone can make it work. Maybe I could make it work.
Yeah.
But if I'm talking about batting average and I'm trying to hit with the highest batting average,
sure.
Let me. If I'm going to do this, let me stick to this. I end up not doing it, but that's what I took away from that. And so maybe I do that one day. But I still would. I would approach it with that mindset still.
You had me stuck on franchise because, for me, if I were to go down that route, I'm talking Chick-fil-A,
sure,
Cane's,
sure.
Those are my big two there.
So then you start to do research, and then you realize what is the protocol for you to get a Chick-fil-A franchise.
Yeah.
And you realize that it's very difficult. That one specifically, some are more lenient, some are less lenient. Some have higher fees, franchise fees. Some are the barrier to entry is a little lower. Chick-fil-A, literally, there's a very big franchise fee. There's a limit on one franchise that you can own as an operator. And then there's a vetting process that the CEO, the owners of Chick-fil-A put you through, where you have to kind of not comply, but live up to these standards that they put. Some of the standards are quantitative, like as far as business sense and structure you have set up, and some of it's qualitative, where they're assessing you, the person, individually.
Yeah.
I think Chick-fil-A is literally based on a faith element, and so
Oh,
So if you're,
they vet,
it's
they,
not
they
a,
vet your faith, like
yeah, to a
your
certain degree.
religious-
I don't know exactly like the limitations of it, but they vet that for sure. And so if you're someone's like, oh, look at that Chick-fil-A is doing numbers, I need to go do that. Well, it's not like anyone can do that. And so there's parameters, and you start learning about that, and it might not end up being for you. Now, if you go and you end up getting a Chick-fil-A franchise and it's in the right location and you do it the right way, that thing's printing money.
Yeah.
But that's all you can do, and there's no days off for that. Maybe you can hire an operator, but for the most part, you are there as the owner operator from day one. You're checking the cost of goods every day before the day starts. When the day ends, you're hiring and firing, like all the way down the list. That is your baby, your one and only baby.
Yeah.
So Chick-fil-A sounds good, and it is good.
Yeah.
But if that's not for you, you got to know that.
No, for sure, sure. Okay. No, I appreciate you covering that. Let's hop back on to the venture side. I'm curious. A lot of VCs, the best ones, they've been in the game for a while, and so they can tell you, okay, during this era, I was interested in this, and then today, here's what I'm looking at. Obviously, you mentioned the Raiders in 2017. A lot has changed since 2017 in a couple of different spaces in tech. Right now, we're sort of in this AI wave that I keep mentioning in all my episodes that we talk about tech on. But in 2017, when you started getting familiar with the startups out here or in the different industries that, your advisors are telling you, like, Marshall, keep your eye on this one, keep your eye on this industry. What was that in 2017? And from your perspective, right now, what are you looking at? Like, I'm sure your view has maybe changed obviously in 6 years.
Yeah. You shift with just like the micro and macro elements of kind of where things are heading. I think back then, you were in the beginning, like the earlier stages of crypto, and then the earlier stages of a lot of the fintech monsters. A lot of them were 2-3 years old. They were being built, but they were just getting adopted en masse by the people, and then there were still ones that were budding. So
did you own any tokens back then? Or?
Yeah.
Okay.
I found out about it years before that, and then took the dive middle of last decade. So
hence the sigh that came with the. Yeah.
No, it's good.
No, it is.
I just kind of keep a real time moving OPSEC. I just kind of keep it to myself. But yeah,
sure.
I was aware. I did invest, and so yeah. But also the underlying blockchain companies, the Web3 companies, were starting to bud up, and we saw the peak of it, if you will. Last couple of years, but they were starting back then. If you think about the lifespan and the growth process of a startup, especially as an investor, you're looking at a 7 to 10 year window before, if you even see a return, whether that's a public listing or a merger and acquisition. And crypto, I would say is even a little bit longer, just because it's a different way to a liquidation event. And so, but yeah, in 2017, it started, you heard about the Coinbases, and they were just starting, being adopted by the masses, but there are other smaller ones that were kind of, everyone's jockeying in the space to see who's going to be the winner.
Sure.
Because generally when there's something that's coming up like that, unless you have a niche or you kind of serve multiple purposes, there's usually 2 or 3 winners. Uber and Lyft have become the winners. Uber's the bigger winner, but there can only be probably 1 or 2 inevitably. And so I would say that, and then fintech, as a whole.
Yeah.
And so, the dawn of the retail investor was kind of upon us, where in your pocket you could invest in single securities. And what, the funny thing is that is, I believe, a bad game to play for the most individuals, but there are people, I'm sure, who've made it big, who've had a lot of success, but the majority of people would have been better off putting it in the Vanguard or an index fund and just kind of walking away. But it allows you, there's so much of the UI involved in that got people like, oh man, this is so attainable for me. And that was the product they were selling, and it's an incredible product,
Yeah. So. I know some people who've killed it in crypto investments. Obviously,
sure.
It was
well, there are people who were doing it, but the first time they'd heard about shorting a stock was in 2019. I'm like, that's not what you need to be doing.
No,
like trading options on margin. Like, no, that's not what you need to be doing. But that, it sold a dream a little bit of.
For sure.
I had more control over this. It's so accessible. It's it's a flashy user interface. I kind of I can see things kind of in real time. And listen, the Bloomberg terminal has been around for a long time. There's people that do that all day, every day. And most of them still don't beat the market. So. Take that with the grain of salt.
No, for sure. I was going to say, like, in the people that have really successful crypto investments, they've been tracking this for longer than the mainstream population. They've known what's been going on for a while. Baron Davis said this yesterday. Shout out BD. He said, the football players, you guys are just so smart. It's because you guys go to school every day and not just in the classroom, but you need to know the playbook. And this process of understanding the playbook, the schemes, the formations, especially as an offensive lineman. I've actually sat in a meeting room at IMG once upon a time, listening to the lineman coach.
That's high school too. Wow.
Yeah. Talk about the different schemes. Well, IMG, they do it.
Oh yeah, it's different levels, but still it's high school level kids. But that's what it's like, and then you add on to that for college and pro. Yeah. Yeah,
and so I have this like healthy respect for, how football players really, you need to go to school before you hit the field and know what you're doing. And you know where I'm going with this, right? This totally applies to like how you could evaluate investment deals and doing your research on the upcoming markets. I'm sure you apply sort of the film room sessions to how you're are going to or currently approach evaluating an early stage deal, maybe in the tech space particularly, because it's just so much reading and analyzing, and it's just so applicable for football players. And I think that's why I see like a lot of football players kill it in venture.
Yeah. I would say, there are very few dumb football players. I played on 8 different teams in 11 years. That's 8 different, now technically 9 different playbooks I had to learn. Some of the playbooks I had to learn literally in a matter of days, like less than a week, and for multiple positions. And so my processing has definitely been put to the test. But yeah, it's definitely applicable to, doing diligence on a company. And a lot of the diligence is qualitative, where you're calling people up in the industry. You're like, hey, it's signaling. It's like, hey, how do you feel? Have you heard about this? Do you know the founder?
Yeah.
Do you know the team? They hire a CEO, da-da-da. And then it's doing your own, looking at the market dynamics of like the sector they're in. How is it doing? What's the total, the actual width of the sector? Like how broad is it? How much money is there potentially to be made on the macro level? So is it from that standpoint, if it's too narrow and there's too many people in that field, there's only so much of the pie to go around.
Yeah.
That you put that into your calculations, and then you run numbers. You ask them for, sales, and you ask them for, onboarding and early KPIs and numbers. And, it's still an art. There's an artfulness to it. And to me, that takes time, and I'm still learning. I have so much to learn about that. But along with all of that data that you're processing and checking and rechecking against other people's data, there's also a qualitative part where you're like, all right, how ultimately do I feel about the founder? How ultimately do I feel about their team, their hiring practices, their ability to lead, their ability to maybe one day step aside and get someone else to lead at a different stage of the company, their ability to go fundraise.
That's an underrated one.
Yeah, and so there's a lot of elements. So it's there's so much input that you're definitely evaluating for each different company. And yeah, that takes a lot of processing.
Yeah.
It takes, a realization that this could still be kind of a team effort that I'm used to as a football player.
Yeah.
Where, I'm still relying on my knowledge, but I'm leading other people in the industry that have more knowledge than me or knowledge of a different sector, and asking them what they think.
Yeah, absolutely. I started giggling a little bit because I had imagined this image of you meeting a founding team in person, and there's this small founding team, and you're asking and vetting them for the financials and stuff, and they're like, here you go.
Well, yeah, it was a little intimidation factor. I just approach it as humble as I can, because I'm very candid with founders, where I'm just like, listen, I'm still learning. I definitely want to have this, carry this gravitas that I'm like, I'm not going to sit here and act like I know everything, because there's something that I might miss that they still might be able to teach me.
Yeah.
And that still might not, especially at that point where it's so early generally.
Yeah.
It's not going to make or break the deal. And so I've seen so much good feedback to that candor, where, they're like, oh yeah, totally. Like, and it's not like they're, misjudging me, and they're like, yeah, we totally understand that. But they also know that I'm there for a reason. They also know that I know what I'm talking about. So I'm like, I would love for there to be something that I can learn from you, because that'll apply for me, 1, 5, 10 years down the road. And then also I'm here to help. I'm here to provide value. There's a 9 out of 10 chance I don't write a check. There's probably almost a 10 out of 10 chance I don't write a check, because that's just the odds.
Yeah.
But you never know. And I might know someone who's right for you. And so this relationship matters, and the rapport that we have matters. And then me ultimately like learning something from you, and you learning something from me.
Yeah.
So it's just, to me, it's always a team sport. I approach it that way at least. And that way you can kind of always come from it with something. It's not just another meeting. It's not just another Zoom call. It's something that's productive in your day.
I'd like to hear about your trajectory, like where you'd like your trajectory and venture to be. So like, for you're at this point right now, you're working on getting your executive MBA at TCU right now, correct?
Yeah.
And then you have your apprenticeship with Next Legacy Partners, which is a VC firm here in the Bay Area. And for those who don't know, Next Legacy has a couple of different fund structures. Obviously, they invest directly into investments, but also they have their flagship fund of funds where, to explain it in a very simple way, you give Next Legacy money, and they allocate that money into the top VC firms in the Bay and around the world.
They co-invest with other of some of the best VCs, and that's just a relationship business at the end of the day. And again, shout out to Ryan Neese, because that's years and years and years in the Valley of a good rapport, and but also like the knowledge that he's going to do right by you, they're going to do right by him, and then we're going to hopefully make each other a lot of money and make a lot of connections. And then there's another philanthropic kind of paying it forward element to Next Legacy that I respect a lot. But yeah, that's the general structure of how it works.
And that's where you are right now.
Yeah.
Obviously, venture is a long-term game. Where do you want it to go from here with you? Like, what do you want to do in the venture space? Like, do you want to start your own fund, or you want to join another? Like, where's your head at?
I'm currently kind of leaving the doors open for that, because I've been approached. I've been approached to come just be an associate right now.
Okay.
But like kind of skip a first few steps, or with a partnership track and stuff like that.
Sure.
At maybe a smaller firm who's more niche.
Sure.
And then being just kind of a helper with deal sourcing. With some of the bigger firms. And so, I see a day when I do something on my own, or kind of co-found a firm with someone, or, try to pave my own lane under the flagship of a larger firm, but kind of in my own region or in my own sector. I do see, possibility for that, but I'm kind of leaving it open. I have I have things in mind where I'm continuing to kind of lay seeds and hopefully reap them one day. But right now, it's just about continuing to learn and build good relationships. And, I still see deals, and that's still always going to be, I hope, part of kind of my outlook is just, I meet a lot of good founders who, I might not even be deploying capital personally, but I'm like, I know a guy who's might be right.
You can connect a door.
Exactly. And being a connector and just ultimately like working with good people, because this is still a small industry. It's a very small industry. This is a small region in Silicon Valley, but as venture has spread to the Austins of the world where I live, New York, Chicago, Miami, it's still a small industry, and your reputation matters.
Yeah.
And kind of what people say about you, or like how you treat them, echoes, and when it's bad, it echoes very quickly, and you start to see less and less. And so to me, it's just about being authentic, using what I view as my unique value as an athlete, and then also, but knowing that I belong here. I'm continue to learn, continue to grow, but I belong here. It's just kind of that fighting off the imposter syndrome every day.
I need to flip the camera to me really quick. We're going to do a decision tree, because I love this conversation. Okay. What I'm hearing is two routes. There's one that you could join a bigger firm as an associate, or you could skip a couple steps and maybe be a partner somewhere that's a smaller firm,
right?
Be able to get your foot in the door faster. There's pros and cons here. I think, everyone wants to make partner, right? Of course.
Yeah.
But some people feel as if, maybe you need a couple years to work under people who are more experienced and whatnot. At the same time, I have no doubt in my mind that you can source your own deal flow based on the connections, your career, the resources you have around you. But this decision tree, I love talking about that, man. It's like, what we got? This is the new free agency decision. Marshall Newhouse. What venture capital firm is Marshall going to join?
It's a decision tree, and there's pros and cons. You can weigh those out, but I also don't view it as a zero sum where if I make one, the other door closes.
Sure.
And so to me, it's about being with the right people, because the people that understand and that who know that I had a career before this. And I'm in that transition phase where you're figuring things out. It's just a new kind of vibe, new kind of wave, and whether whichever one of those I end up choosing, or even if I choose one of those specifically, that doesn't close the door to the other one. And that, honestly, I think that just bolsters my career in a certain way, because again, I'm going to move in the spaces with confidence and with kindness and with good faith, and continue to kind of build and grow, and my value be added, whether that's added eventually as a partner in a small firm that I hope will grow into a big firm, or working on a big firm. And if I still feel like I have more room to grow, then I'll be honest with that, and kind of play the game theory out that way.
Yeah.
But it's just to me, one door doesn't shut you know, either way. So I view that as a privilege, though. I know it's not for that everyone gets the opportunity. I view that as a privilege that I've also worked for, but also a lot of luck, a lot of fortune, a lot of good people in my corner.
Yeah, absolutely. That was well said, because you were seasoned for the opportunity. You're well spoken. You're like, all right, I'm gonna leave this door open. I'm gonna keep this door open, and maybe if this door.
Well, I told myself that while I was playing was if I had to do nothing else by the time I retires, I just want a lot of options.
Yeah, of course.
I want to make as many options for myself to walk through and experience, and give myself the leeway to be like, this wasn't for me. But I had the opportunity. I made the most of it. I treated people well. Let me go try this other thing. And generally, people will be like, "Yeah, I get it.
Yeah.
Let me call my guy who knows this guy because you moved well. You moved in the space the way you're supposed to.
Right.
People who move foul, man, that stuff just catches up with you. And ultimately, it's still a people business.
For sure, what goes around comes around. Well, Marshall, hey, thanks for stopping by and chatting with me about your professional journey, particularly in venture. Early on in my podcast journey, people were like, "Oh, you got to have Marshall on. Marshall, no, you got to have Marshall on." I'm like, "Who's this Marshall guy?" And so, I really appreciate you.
No, man, I appreciate you, bro.
Chatting out.
Yeah, my pleasure.
All right, that wraps it. We're out.